guys, welcome to the TMT Stock Market Strategy video for Friday, December 9th. Well, the push up continues, all on low volume, very, very low volume, but I will tell you that the institutions are selling into this rally big time. A lot of dark pool activity. As we all know, a lot of algos that are actually just pushing this market up, along with retail chasing price. So that actually is a dangerous recipe. So I mentioned before, guys, if you're day trading, of course, that's one thing you still need to know what's going on behind the scenes. And let me just show you the VIX here. VIX is up when the equity markets are up, especially when you have a melt up like this, when these algos just really lose control of the market and just buy everything. And you would have the really annihilation of the VIX, as you can see. And look what happened. Right now, we're actually up. We were up the last 2 days. We're down below at the bottom of the band, and on top of that, we have extreme complacency when you get down to these levels here below 12. It's very, very big level here. And every time when we get here, you usually get some sort of a risk-off type of environment, and you shoot to the upside on the VIX, which is inversely correlated to the S&P, so the S&P would go lower. All right, so just keep an eye on the VIX intraday. When you see there's a bid, a continuous bid in the VIX or the VXX, whatever instrument you look at, you have to be careful saying, oh, you know what, the bigger firms are hedging now because they're a little bit, they think that the market has gone ahead of itself, and I do believe that is 100% correct. When you have something like an election, that's great, but when you don't even know what the policies are, even though it's just not based on an assumption of policy, it's just crazy. I can understand 1 or 2 days up, and then the market consolidates, but this is never seen this in 29 years doing this, but as always, there's always a first for something. But you could see in the VIX, be very, very careful when you see something like that happen. Next is going to be the dollar. Another culprit, like I mentioned before, I said dollar, even if it got back down to the 25.59 area, I think it'd still be a good long trade. And as you know, we just got back up again. So, and the dollar is moving higher yet again. At one point, until one of the smart money guys realizes, hey, I think this is crazy. Dollar's moving higher. Interest rates are rising. We're going into an interest rate rising environment. Not good for stocks. Dollar not good for stocks as well. And oil rising as well. At one point in time, somebody has to put the brakes on it. So, and when it does, you're not going to get a gradual sell-off. You're going to get exactly like you had here, a melt up. You're going to have a meltdown. So that's why be very careful. And if you are holding positions, I would suggest maybe hedging. It's very cheap to hedge at this time. GDX, I think we're going to get one more push lower. I mentioned yesterday, and right now gold is down and lower again. So I think we're going to get a little bit of a push, and we'll see what happens here. 1167 is where gold is. I think gold gets down to about 11, I'd say 1100, 1080 to 1100. Then you start looking to buy some gold. And as the GDX, next is going to be the GLD, and you can see here that's the gold. We're going to probably lose this support today, and we'll probably get down to that 107 area that I'm looking for, 107, 108, and that's probably a good area even to start nibbling in to a GLD, depending on your time frame too. Spiders, you can see, guys, absolutely insane. We're up at the upper end of this bearish rising wedge. We broke down from it, and then of course we got back in it again. So let's see what happens today. Today is Friday. At one point, somebody has to take a profit. I mean, it's just insane. No volatility. Very, very boring. Very, very boring market. And yesterday, we just popped up and stayed up. And that wasn't the high probability trade that we reviewed on Thursday morning. Okay, where we had a nice little, no change to slightly down, and then the buy program came in. That's when you could catch that ride. That's the high probability trade, and even as well to the downside. Okay, next is going to be 60 minutes. Just want to show you where we are here. You can see how crazy this has been. Continually straight up. We had 2 little down days out of almost a full month of trading, going back from November 7th. It's just absolutely insane. And we're into extreme overbought territory, guys, in every time frame here. Okay, next is going to be the IWM. This is actually really funny. You can see here even more so how ridiculous this move is. 4 days straight up after a 14-day move of almost 14% in less than 2 weeks. 3 or 4 down, small little down days, and then another melt up on absolutely no volume. Yesterday was the only day to consider the volume here that we had. Now, when we have something like this volume, this is where when we talked about capitulatory tops, blow off tops, you need volume. You need high volume, and we're there. We're almost there. Maybe today we get more volume, and then that should be it. If we gap up, really what I'd like to see is a gap up, and then a reversal. And that's something that when you'll know when the top may be in. Okay, but right now, obviously, you're not looking to. I wouldn't want anybody looking to short anything at these levels. Okay, next I want to show you is the volatility for the IWM. All right, and this is the RVX. This shows the volatility for the Russell 2000. It's just like the VIX, right? So it measures the gauge of volatility. When you get down to these bands, it's inversely correlated. You're going to get a really good sell signal in the IWM. Excuse me, just like we did here. We had a buy signal. We came out of the band. We closed back in it, and sure enough, look at the big move we had. Great trade if you were involved in this and if you saw this the volatility index for the IWM. So we're almost there. If we get outside the band today, and we can close outside the band today, and then Monday we get a little sell-off, close back in the band, that's going to give us a sell signal for the IWM. So I just want you guys to know that, all right? Great measure of volatility for this index. Okay, next is going to be the Qs, and the last is going to be the Qs. And you can see here, we did get a little bit of move from the so-called FANG stocks, Apple, Facebook, and they did move, but we're still here in a range bound here. And then let me show you that 15-minute again. This is from our Pro Trader Premier video. Guys, check it out. I'm telling you, it's worth every penny. Gives you some phenomenal support areas and resistance areas that you can short and buy into. And these are not just not just numbers. You know, support resistance. There are a ton that are calculated pivot points, Fibonacci's. So you really should take a look at it. It's bar none. We also identify patterns, something that you should have in your trader's toolbox. Guys, have a great day. Enjoy the weekend, and we'll see you on Monday.